right, good evening everyone. Welcome back to Walks on Wall Street. It is Wednesday, June 21st, 2023, and we are back in New York. We are back in the big city. We're standing right outside the beautiful former Time Warner Center, now called Deutsche Bank Tower. Deutsche Bank is a German investment bank, bulge bracket bank. But if you sort of look right here, in this sort of vicinity, I believe that is the Jazz Hall at Lincoln Center, as well as it might be the Mandarin Oriental Lounge, I think, or maybe a little bit taller. But this side of the tower, I should say, the more north-facing tower, where you could see the majority of the lights on, it's actually the Mandarin Oriental Hotel, 5-star hotel here in New York City. We're actually standing right outside another 5-star hotel. If I point the camera further up, this is the Trump International Hotel and Tower, right at 59th Street, Columbus Circle. It's going to be a shorter than normal live stream tonight. I also want to apologize. I forgot the microphone, so the wind is going to be a little bit crazy. So please excuse the wind noise for tonight. But we're going to be doing a little bit of a recap of the financial markets and talking about the Federal Reserve. Because today we actually heard yet again from the Federal Reserve, more specifically the Federal Reserve Chair, who just so happens to be Jerome Powell. So if we think about where we're coming from, we are coming off the back of probably one of the most aggressive tightening cycles since Paul Volcker, right? Since the 70s. The Federal Reserve raised interest rates in excess of 500 basis points. And as of right now, the Fed funds target rate stands at 5% to 5.25%. Now, if you remember correctly, last week was actually the conclusion of the FOMC meeting, which stands for Federal Open Market Committee meeting, in which case the Fed actually decided to pause. That's right, they decided to take a break and take a pause in their rate hiking cycle. So we had no interest rate hike last week, so interest rates remain unchanged. However, it was a little bit of a different story today as Fed Chair Powell was testifying. And he says we're a long ways away off of our target, which is 2%. So for those of you who don't know, the inflation target range for the Federal Reserve is 2%. And Fed Chair Jerome Powell said during his, I guess you could say, testimony, as we have the FDNY coming down, hopefully everybody's all right. Looks like you have some ambulances here. He said that almost every single voting member of the Federal Reserve is in favor of an additional, or I should say at least one additional interest rate hike before the tightening cycle has concluded. So what does this mean? Well, if you think about next month, which is July, I can't believe it's already July. Happy first day of summer to everybody, by the way, before I forget that. But next month is going to be the July Fed meeting. And after today, after hearing from Fed Chair Jerome Powell, it looks like we're probably going to get at least one more 25 basis point rate hike. And if that's the case, that's going to bring the Fed funds target rate to 5.25% to 5.5%, which has really been consensus anyway on when the tightening cycle was going to end. Now, this doesn't mean that once we get to 5.5%, at the August and September meetings, we're just going to start to cut all the way down to zero. I don't think so, but I think a lot of people on Wall Street and on Main Street are expecting this hiking cycle to end with a bunch of rate cuts. That's not necessarily the case. We could be in an environment where the Fed just holds interest rates at 5% for years. I don't know. We'll talk about it. We'll talk about it tonight. Notable earnings reports coming after the bell. KB Home. Did anybody see that? Let me go ahead and try to drop the earnings report in the chat. If you type in ticker symbol KBH, KBH is the ticker symbol for home builder KB Home. They did beat on both the top and the bottom line. And I will go ahead and drop the link to the investor relations page in the chat. Let's see if I can do that. All right, there we go. All right, let's get started, everybody. We're going to be on for about an hour. Before we start, let's say hello to everybody in the chat. All right, I see Gary Carpenter. What's up? FredX is here. Gigi NYC. What's up? Ryan Beck says, hope you're well, Tom. Glad you're back in New York. I'm glad I'm back in New York as well. It was a much needed mini break in Miami, though. Hold on, I gotta put you guys down. Yeah, it was, it was a much needed break in Miami. I had a really good time. Unfortunately, we couldn't do as many live streams as I had planned because this is our rainy season. So for those of you who are unfamiliar with South Florida or Miami, Florida, this is our hurricane season. So pretty much once a day, we get these really, really ferocious lightning storms and, rainstorms. And it just so happened that we had a lot of them during the time where we were supposed to be doing the live stream. So apologize for that. We are on the corner of West 61st Street and Broadway. I see Golden City is here. My friend Dan Zhang. Good to see you, Dan. Welcome. Let me see who else we got. Steph UH. What's up? Solo 401. As always, good to see you. Sandra Dickinson from Canada. What's up? What's up? Ryan Royal, Michelle K. Who else we got? Justin S. Says, how is the flight back home? The flight was a little bit crazy, not gonna lie. So I got, what did I get? We were sitting on the tarmac. Is that what it's called? Runway tarmac? I don't know. Anyway, we were sitting on the tarmac for about an hour because, again, we had these huge lightning storms roll in. And when we were all clear to take off, that was probably the worst turbulence I've experienced in my life, which was a little bit crazy. But it was also kind of cool to experience because I've never experienced the lightning storm, and I had a window seat, so I was looking out the window, and you could see clear as day these huge lightning strikes. But aside from the turbulence, it was cool. It was a good flight. I landed back in one piece, thank God. And yeah, it was not a bad flight. I flew American Airlines. I tweeted this, I think yesterday. I said I only pretty much exclusively now fly American. Even though last year, flying was a horror show. I think I've flown maybe over 35 times last year, and all but 2 flights were either not canceled, delayed, or mechanical issues. So pretty good improvement from last year, I would say. Pretty good improvement. I want to take you guys to Lincoln Center first because we haven't been there in a long time, and I believe they are just setting up the outdoor, I should say, summer festivities. Today is the first day of summer, June 21st. So Lincoln Center should look pretty cool. We'll take a quick walk up there, and then we'll just do our usual around the Billionaires Row section in New York, because I got to cut the stream early because I got to be up extremely early. Got to be up at like 5:30 in the morning. Hey, Billy Johnson is here. What's up? Sparks Carnival. Good to see you. This is the Hotel Empire, very famous hotel. Austin City Limits. What's up? Yeah, Sparks Carnival says Bitcoin is having a bit of a bid lately. Very insane. So let's actually talk about that. That was one of the things on the list. Love this dog here. If anybody remembers our conversation specifically, I should say, 2 weeks ago now? Was it 2 weeks ago where the SEC came out and slapped Binance with all those charges, and Coinbase got in a little bit of hot water? But, we've been talking about this, and we've pretty much called this, I think, as a group. And again, apologize for the wind noise, but, a lot of those alternative altcoins we have, been in agreement to sort of stay away, right? Because the head of the SEC, Gary Gensler, has been so inconclusive in relation to providing regulatory clarity on the space. So I'm not a lawyer, right? I'm not a securities lawyer, but I know how to read. And if you know a little bit of securities law, I mean, you would just assume that a lot of these altcoins are securities. So that's essentially the narrative that's being played out now from Gary Gensler, is that a lot of these alternative cryptocurrencies are securities. And if that's the case, that means Coinbase, Binance, and a lot of the other exchanges are therefore soliciting, selling, or providing these unregistered or unlicensed securities. So you had a big sell-off in the price of Bitcoin over the last 2 weeks on this news. And I actually put out a tweet, if you want to see it on my Twitter, @Walks Wall Street. I said, look, there's many market participants that really don't understand this whole space. They think that Binance and Coinbase is the same thing as Bitcoin, right? They think all these other altcoins is the same thing as Bitcoin, but it's not. I mean, the SEC has actually been very concrete in saying Bitcoin is not a security, right? It has nothing to do with these exchanges. So I think you had a big shakeout down to the 200-day moving average. And you've had massive volume come in over the last 2 days. I could only imagine how many people puked up a lot of their Bitcoin over the past, 2 weeks. And I think we're trading at over 29,000 again, which is kind of crazy. So here is Lincoln Center. I think this is one of the world's largest disco balls, I guess, right here on Columbus Avenue. They usually have a silent disco here, though. Hey, Jay, what's up? Sparks Carnival says Adobe is crushing it lately. They really are. Yeah, Oscar Diaz says, Tom, the submarine situation is crazy. It is. I've been looking into it really only today. It sort of piqued my interest, and the more I look into it, the more horrified I become. Because I am extremely, extremely claustrophobic. I don't know about any of you guys, but holy crap. I mean, I believe there's 5 people aboard that submarine. So hopefully, look, there's so many resources being deployed between the U.S. Coast Guard, the U.S. Navy, I think, is involved now. I believe our neighbors in Canada are assisting in the search, as well as the UK. So please God, that's the only thing that we could hope for, is just please God that they find this thing, because I can only imagine how, look, I couldn't be keeping it together down there in a little tube, 5 people, and you're limited on oxygen. I don't know. It's a horrible, horrible situation. And again, I've only just learned about it today, really. I've been sort of reading some articles about it. I've watched some press conferences, but it's really bad, man. Hey, Zay Batata, what's up? Yeah, Wabi says I'd have a stroke in the first 5 minutes. It's horrible. It's a horrible situation.
If that wasn't because of the LGBT community, we wouldn't be here because I'm the gay one and they brought us because I'm gay. So,
hey, NBA Elias, what's up?
Hey, so
all right, let me get you guys a little bit closer to this. I remember last year they had the silent disco here.
Our family here, thank you so much, man. We love you so much. Champeta, para el mundo, USA, que siempre está pegadito al picón con Basunto de Mars. A todos nuestros amigos.
So you can see the big disco ball.
Colombia entera que están aquí esta noche. Gracias. All the people from here, from New York, from area around the world. Thank you. All around the world. Thank you so much for coming. We're gonna leave you with this song. I hope you enjoy it. Let's do it like first, like very slowly, for those that know this song. So, vamos para adelante, suavecito. Ahí sí, ahí.
Yeah, photos. Oh yeah? Oh, okay. Awesome. Thank you, man. Appreciate it. So it's free. The guy was like, it's free. We can go in. I'll quickly show you guys and then we'll head out. Oh, I think we may have to go through security. Maybe another night. I don't want to go all the way through there. Maybe a pain. Maybe a pain getting out. Yeah, Hawaiians love the setup. I just don't want to go through the security and then come back because I don't have a lot of time tonight. But yeah, if you guys are visiting New York, it seems like a cool place to visit. Hey, Western Mass Dave, what's up? Good to see you. Victor Bravo says hello, everybody. What's up, Victor? Welcome. Midnight Boba, what's up? Hawaii, welcome. NBA Elias says, Tom, did you see any of Powell's testimony in front of Congress today? More rate hikes on the way. Yeah, so we briefly reviewed that at the beginning of the stream, but I think that's pretty much the number one sort of topic of conversation. You know, if you look at consensus, is that the Fed is going to stop raising rates once the Fed funds rate is at 5.5%. So that implies one more interest rate hike of 25 basis points, which I think we're going to get in July. So it makes sense. They pause this month, right? So rates are unchanged this month. And then the next month, we raise rates by 25 basis points. That's what it looks like. But if you watch the testimony, to your point, one of the things he said is that almost all of the Fed presidents that vote, right, because some of the Fed presidents are not voting presidents, and you could look this up. I believe they posted on the Federal Reserve's website where some of the Fed presidents, one year they'll vote, some years they're not voting members. But out of all the voting members, the vast majority are in favor of at least one more rate hike to the tune of 25 basis points. So I think we'll probably get that in July. Now, I tweeted about this and, you know, I was going back and forth with some people on Twitter, and a lot of people were like, look, well, I'll just preface this by saying this. I think a lot of market participants are associating, at this point in time, higher interest rates with poor market returns. But I think we've seen the worst of sort of the, let's just cross here without getting hit. I think we've seen the worst of this market drawdown. I really, really do. And you know, if you look at a lot of the individual stocks, which we've talked about, particularly the high beta, so very, very high beta, turbocharged, which just so happen to be a lot of the SaaS companies, those have already been clocked, like 90%, right? So, you know, in an environment, let's just say hypothetically, where we go to 5.5% on Fed funds and we leave it there for maybe a year, I don't think that's the worst thing in the world. I don't think that's the worst thing in the world at all. If anything, I think that's good for the US economy long term. As we're coming up on Billionaires Row here, you can see Central Park Tower and 220 Central Park South. And this is the Trump International Hotel and Tower, which is a 5-star hotel here. But again, and I wrote a little bit of a diatribe on Twitter, and I said, I think since the lows of 2008, it's conditioned market participants to think ZERP is normal when it's not. We are actually going back to normal, technically. So if you think about a lot of people saying, oh my gosh, mortgage rates are so high, this is not normal, when are interest rates going to come down? I mean, it's not normal to have, 2.5% 30-year fixed rate mortgages, right? So in conclusion, I think the way it's good for the US economy long term is that you're finally rewarding market participants for the appropriate behaviors. So what do I mean by that? Well, in a normal functioning economy, individuals are rewarded for saving. And the way you grow an economy is through savings, so that once you have savings, you could then invest it. So the average American, over the last 14 years, essentially was yielding nothing, zero, in a savings account. Well now, again, as we've been talking about, if you look at the yield curve, right, if you look at a 1-year treasury, I think it's like 5.25%, right? So 525 basis points. If you look at some CDs out there, some 12-month CDs, if you look at money market accounts and the like, people are actually going to be rewarded for doing the right thing, which is saving their money. And that's going to help people to save money for down payments on homes, for investment into, business ventures. So that's sort of the way I look at it. I think the way a lot of people are looking at it is through the lens of the modern monetary theory, where, you could just have money printing in perpetuity and people could just borrow money at ridiculously low interest rates to spur, consumer spending and business investment. But the problem is access to credit, right? That is what I think a lot of people don't take into consideration. Because, cheap money and easy money is great for Wall Street, right? All these big mega banks and hedge funds and private equity firms, venture capital, because they can borrow money pretty much in unlimited amounts for free. Well, technically free, right? I'm just being a little bit facetious there. I'm referring to extremely low interest rates, right? But if you look at retail, like a person like me and you and many people watching the stream, we don't have that same access to capital, right? For obvious reasons. This is 15 Central Park West. This is actually one of the most exclusive addresses here in New York City. I think the former CEO of Wall Street mega bank, Goldman Sachs, Lloyd Blankenfein, I think, has a really nice unit here, 15 Central Park West. But I don't know. What do you guys think? Do you think that a higher for longer environment is going to be detrimental to the United States, or will it actually help? There's a lot of differing opinions on Twitter for sure. Hey, Dr. Longas, what's up? Welcome back to New York. Sally is here. What's up? Midnight Boba says, unfortunately, this inflationary environment is a catch-22 to savings. That is true, but finally, right, if you look at CPI, right, if you look at the latest CPI report we got, and then if you look at, let's say, a 1-year treasury, you finally are over the hurdle rate. You're finally making a real rate of return, right? Because when you think about a rate of return, you need to think about it as it relates to nominal rate of return and real rate of return. And a real rate of return is factoring after inflation. So Boba is 100% correct there. Look at these two glorious buildings here on New York City's Billionaires Row. Now, the building on the left that is extremely skinny is actually the skinniest residential apartment building in the entire world. Okay, this is 111 West 57th Street, also known as the Steinway Building. But the building to the right of it, this is 157. This is actually the building that kicked off the entire trend of Billionaires Row. It was developed by the Extel Group, which just so happened to one-up themselves when they built this monstrosity which is called Central Park Tower. And if you look all the way at the top, there's the triplex that is listed with Ryan Serhant from Serhant Brokerage. It's on the market for a cool $250 million. Kind of cool. Hey, Richie is here. What's up? Always a pleasure to have you. Justin S. says long run, it will be beneficial. Short term, a lot of people have to readjust their thinking, spending habits, which may cause some chaos in the markets in the real world. That's a really good take, actually. Which reminds me of a tweet that the CEO of Thoma Bravo actually recently put out. Did anybody see that? So if you're not following Orlando Bravo on Twitter, I think he's a really good follow. He's one of the most successful private equity guys ever. He's from Puerto Rican descent. I think we just had our Puerto Rican Day parade in the city, didn't we? Something like that? I think we did. I was in Miami for that. But Orlando Bravo, again, CEO and founder of Thoma Bravo, very successful private equity firm, said exactly that. He's like, a higher interest rate environment is going to force companies to go back to the basics, right? And we've had conversations about zombie companies before, right? A lot of companies in, smaller cap, Russell 2000, IWM, things like that. And this happened in a lot of the turbocharged, again, going back to extremely high beta growth stocks like SaaS companies. A lot of those software as a service companies were built off the back of easy money, right? Cheap money. And one of the ways that was done is it's just go after market share at all costs, right? Assuming you were a SaaS startup and you were VC backed, all of the advice you were getting from your VC or your venture capitalist was just attack market share at all costs, go out there and grab market share at the cost of being profitable, right? So let's say if, you can bring in $1 million ARR, which is annually reoccurring revenue, but you're losing more than half of that out of the back end, these companies are not profitable. But over the long term, the theory is if you can keep your customers from churning, right? It's an industry term called churn. If you can keep your churn rate extremely low, while at the same time, over time, decreasing your operational expenses, you're going to grow into profitability and your company is going to be an absolute cash cow, which many of them are, but it's harder to start those kind of businesses in an environment where money is just not free anymore. So Orlando Bravo, he's like, what he's advising his businesses is, look, go back to the basics, go back to the fundamentals, focus on profitability, right? It doesn't need to be the wild, wild west where you go out and gain market share like an animal. Over time, you could do it slowly. I think a lot of startup founders want to be number one in the market from day one, but essentially you're paying for customers, right? You're essentially just paying for customers. But yeah, it's an interesting thought. All right, now we are at the south side of Columbus Circle. I'll quickly show you guys Deutsche Bank Tower again, which is right here. Hey, John, what's up? Good to see you. Meg Lowe says, looks like a beautiful night in New York. It's a gorgeous night. However, I will say this. We better enjoy it tonight because tomorrow and over the next 3 days, it's going to be pouring raining for like 3 days straight in New York, which I'm not looking forward to, but we'll have to deal with it. Sparks Carnivals is on bullish Meta, great AI company. Arctic Paratroopers is glad you're on tonight. We've missed you. Thank you so much, my friend. Appreciate it. Yeah, I mean, we weren't able to be on last night because I was flying back to New York. And then 2 nights ago, there was tons of lightning in Miami, and I don't really want to walk around in the lightning. So, happy to be back on tonight for sure. Let me catch up on some of the comments here. Hey, hang with Mark Moms. Has just heard Qualcomm's laying off hundreds in their San Diego headquarters and stocks took a hit. So glad I sold last week. at 125. Hang with Mark Mom says. You know, I didn't see that news. I think you're breaking the news to us live here. I didn't see that. Were they specific on which division they were laying off? It kind of seems crazy, right? Because if you think about sort of what Hang with Mark Mom is saying about this big semiconductor chip company laying off people, if you look at manufacturing, I should say manufacturing production in the United States, new, I should say factory activity is actually picking up. And not to be confused with manufacturing activity. I'm talking about like new builds of factories. And that's picked up for a very specific reason. And I'm sure you've all heard of the Chips and Science Act, which, you know, I'm not the biggest fan of the Biden administration, but I think that was a good thing to do, the Chips and Science Act. It essentially provides massive subsidies to semiconductor companies to start to reshore a lot of that manufacturing capacity to the United States, more specifically in the formation of chip fabs, right? So chip fabrication factories. So again, that's not going to be like an immediate, you know, you flip the switch and all the manufacturing capacity is going to, you know, zoom to the United States. It's going to take a long time to build these things, right? And to get them up to capacity. But, you know, I guess better late than never. But interesting that, you know, maybe they're just doing a basic round of layoffs. I don't know. They have not affected anyone over at the Colorado offices yet. Copy that. SquareBet says, Tom, do you use Salesforce? I'm thinking of buying the stock. I can't advise on like if you should buy a specific stock. I can only speak in generalities just because I'm not licensed to do any of that. This is more of just like a general conversation about the markets. But to answer your first part of the question, do I use Salesforce? I've exclusively pretty much used Salesforce throughout my entire, I should say, career as an account executive, all the way up to enterprise sales director. Now, when I left the big Fortune 500 company I was working for to go work at a smaller startup, we didn't use Salesforce. We actually used a company called Zoho, Z-O-H-O. And Zoho is another CRM, right, customer relationship management software that is more geared towards smaller teams, small businesses, or SMB. So I think Salesforce is a great company. Mark Benioff, I think, is like the pioneer in SaaS. I would highly advise and recommend you read Mark Benioff's book called Trailblazer. I think it's a fantastic story. You'll learn a lot. He actually got his start working under Steve Jobs. I don't think a lot of people know that, but Benioff was an intern for Steve Jobs back in the day before he started Salesforce, which is arguably one of the most successful SaaS companies ever. So yeah, I mean, anybody here, I mean, I'm sure we have a lot of people who use CRMs. Which CRM system do you guys use? Do you use HubSpot? Do you use Zoho? We got the FDNY coming here. This is Engine 23. Love the FDNY. These guys are the city's bravest. Always good to have them around for sure. This is 220 Central Park South. This is actually the building where Ken Griffin from Citadel and Citadel Securities purchased, I think, 4 floors in this particular building. Now, there was a unit that just went under contract Memorial Day weekend for $75 million right here, 220 Central Park South. Hey, SquareBet, thank you so much for being here. Jay Sully says, Tom, are you still in enterprise sales or did you move into management? So I'm out of the tech business altogether. I'm out of the tech business altogether for now. I will keep you guys apprised. But yeah, look, I had a great career in tech sales. And I never, ever wanted to be in tech sales. When I was in college, I couldn't even tell you what software as a service was, honestly, when I was a freshman in college. But you know, I think I told this story before. One of the main reasons why I sort of took a career in tech sales, tech and telecom, is because I was working as a car washer on the Upper West Side of Manhattan. One of my jobs as a teenager, just to make a couple bucks during college, I would wash rental cars, right, at this company called Enterprise Rent-A-Car. And in the morning, I always noticed the same people coming in. And one of the guys I talked to was a big manager, a big, I guess you could say, regional manager at Salesforce. And I asked him, like, what is Salesforce? And he was telling me about the cloud and all this. And I looked at him like he had 3 heads. And he's like, look, you're a personable guy, you're smart, you're young, you know, try to apply to a job at either a telecommunications company or a software company, and they'll sort of teach you about it. And then since from that day, I've just been religiously obsessed with software, telecom specifically, not only analyzing these stocks, but selling the products. And you know, you never know in New York. It's crazy who you're gonna meet. And I sort of just essentially landed in a very lucrative career, and I had no idea I was ever gonna do that. Right here on the corner of 7th Avenue, everybody. This is on the corner of West 58th Street and 7th. That's a really cool car. Across the street, this is actually the New York Athletic Club. But this isn't the most impressive building actually on the block. It's actually this one right across the street. And this is called Alwyn Court. This is one of my favorite buildings of all time in the city in terms of residential apartment buildings. During the day, it does it a little bit better justice. I'll just tell you that. If you look at any of the links in the descriptions, like my Twitter or anything, I've posted pictures of this building millions and millions of times. The architecture is just unrivaled, honestly, in the city. But not only that, I'll sort of cross the street so you guys can see what I'm talking about. It's more so the contrast between the architecture. You'll know what I mean in a minute. So you have all of the original, I should say, architecture. And then right above it, you have Billionaire's Row, 157. Definitely an architectural contrast here. And you can see the Steinway building too. Now this building, I believe, is sold out. I don't think there's any units available for rent or for sale. Very exclusive building. I can kind of see why too. All right, let me catch up on some of the comments. Hey, Sir Williams is here. What's up? Sabrina Fair, welcome. Long time no see. Hopefully you're well. Roberts, Salesforce is big in San Francisco. Yeah, I mean, in San Francisco, that's where the main Salesforce tower is, which I would love to visit, by the way. I've never been there. I would love to check out Salesforce Tower in San Francisco. But there's also a Salesforce Tower here in New York, which is right across the street from Bryant Park. They have a really nice tower adjacent Bryant Park. Robert says you should come here. I want to get to San Francisco, and I'll tell you another reason why I want to go to San Francisco. We've been talking about the commercial real estate horror show that's going on throughout the country, not only in San Francisco, not only in New York. It's pretty much everywhere. Commercial real estate has already taken a big beating, and I think is going to continue to take a big beating, especially in New York, until the city can start to work with some developers for some maybe concessions or tax abatements or credits to try to do a lot of these conversions. But anyway, I think a lot of people right now are getting very, very negative on San Francisco, right? And for good reason. You know, if you look at a lot of the data, I was reading an interesting article actually out of Reuters, and Reuters was analyzing cell phone data during peak working hours in Midtown Manhattan as well as San Francisco. And on Tuesdays and Thursdays, Midtown Manhattan is almost already back to the same traffic where it was pre-pandemic. San Francisco is only about, I think, 20 back from tracking cell phone data. So you've had a pretty good recovery here in New York, but San Francisco not so much at all. And I think it was because San Francisco is a very unique economy, very dependent on the tech industry. And what did we all learn from COVID? Well, if you're in tech, especially if you're a software engineer, you could literally do that work from wherever you wanted. And since the city has been in decline, right, due to crime and homelessness, I think more and more people have decided to move out. But that is when there's opportunity, my friends. When buildings, and these buildings, particularly on the commercial real estate side, are going to sell for pennies on the dollar. They're probably going to sell for land value, by the way. That is where there's opportunity. So stay tuned, is what I'll say. Hey, Julia M., what's up? All right, let's do a quick prediction, and I'm going to timestamp this. Does anybody think, okay, who thinks in the chat San Francisco is going to make a full recovery in due time and surpass where it was pre-pandemic? Or do we think San Francisco is going to go by the wayside of a city like Detroit? Any thoughts there? Yes, NBA Elias, is Tom KB home? They had earnings today. I saw that. Yeah, and they posted really good earnings. I want to talk about that too, and housing in general. Mars Tech says I do. I think so too, Mars Tech. I think so too. Hey, Paul. What's up, Paul? Says I never thought I would miss the sound of people talking and walking. Yeah, you're right. People are saying San Francisco is the new Detroit. Brian says San Francisco will recover, so we're about half and half. We're about half and half. Some people think, Victor says San Francisco will modernize from Far East investors. Hey, DM says I hope they will recover. I think it's going to take some time. I don't think it's going to be immediate, but in a place like San Francisco, it's again, I think New York is very, I'm going to use the term privileged because I don't have any other alternative word to use. So let's just work with that word for now. I think New York is very privileged in its history, right? It's a very, I should say, magical city where everybody from all over the world dreams about just coming to New York because it's, been in so many movies. It's so famous. There's so many famous buildings, from the Empire State Building and all that. So I think in that aspect, you're always going to have a demand for people to come here. And we actually saw that during COVID. There's tons of statistics about how when a lot of the older, wealthy New Yorkers were moving out during the pandemic, a lot of younger people were actually moving in because they thought, wow, this is my chance to finally be able to live in New York City, because we had a little bit of a mini real estate flash crash here. But San Francisco really doesn't have that as much as New York City does, right? There's other better alternatives, right? You can go to, Austin, Texas. You can go to Houston. You could go to, other cities within California, right? San Diego's been very popular. But I think over time, once these property values decline enough where it would be worth it to do full demolitions, I think the city is going to become fashionable again. And I think a lot of real estate developers, especially the ones who have a really, really iron stomach, are going to make an absolute fortune. So that's what I'll say. Hey, Mel, it says I spent 2 years in San Francisco right after the first tech bust. It never quite recovered from that either. Wow. NBA Elias, still tons of VC money in San Francisco and the Bay Area. Many complain, but few have left the region. Tiffany Page says New York will always be a cosmopolitan city. Yep. Yeah, we'll see. So I never want to get too negative. You never ever want to get too negative on something. I could see why Detroit really never recovered, because obviously, manufacturing all went to particularly, Mexico, India, China, right? But tech is what's going to drive really the back half of the 21st century in terms of economic growth in the United States. So my bet is that it's going to take a little bit longer for a city like San Francisco to recover, but I think it will. And I think people who are strategic in placing the appropriate bets are going to make quite a fortune. I think they are. And I think there's opportunity in big cities like New York too. Some of these commercial buildings, particularly office, right? Older buildings from the 1980s. It's very difficult to, well, I'll say this, and we've explained this before. What we're seeing in New York as it relates to commercial real estate and office specifically is a massive flight to quality. So what do I mean by that? Well, I'll give you a couple examples. You have the Hudson Yards, which is all Class A brand new office space that is very, very sought after. You have 425 Park Avenue, which is the beautiful brand new office tower that was built on Park Avenue. Again, Class A property. Now, there's a ton of old office space, particularly Class B, that was built in the 1980s. Ceiling heights are very, very low. Even if you were going to remodel a lot of these, I would say office spaces, it's very difficult to raise ceiling heights. It's hard. It's almost impossible to do any of that. So a lot of companies that are trying to entice their employees back to the office. Well, nobody's going to come back to the office if they have to sit in a 1980s cubicle. They're going to Hudson Yards, right? We talked about how KPMG, big consulting company, they moved their big headquarters to the Hudson Yards, right, away from the east side of Manhattan. And I think everything else is going to be left empty. So it's going to come to a point where a lot of the, I would say, Class B office space in New York is probably going to sell for close to land value. And the city's probably going to have to get involved to, make the deal a little bit better for the developers. And they're probably going to demo a lot of these buildings. But the numbers have to work. And right now, just think about, the cost of demolition, the cost to demo a building, price per square foot. So I don't think we're through it yet. But again, being an optimist, if you look out 15 years, that means there could be some really nice new buildings and maybe new housing coming on the market in New York, which is actually what we need, right? Because, one of the main reasons why we haven't really seen real estate prices in New York drop as much as expected is because there's just not a lot of inventory on the market. Particularly in New York, there's been a shortage of inventory because a lot of the laws have prevented new developments for affordable housing. If you look all the way down the street, check this out. Look at that. It's so clear out tonight, you could see all the way to One World Trade Center. Not bad. But tomorrow it's going to be horrible weather, guys. It's going to be raining all night. Hey, JM is here. What's up? Crypto Meme is here. Says, hey, Tom. The LT Prods is Imagine talking about having to entice people to go back to the office 5 years ago. They would have all been fired. That's a really good point. Think about how much has changed just over the last 5 years. Quite a lot. But I think at a lot of the big firms, right, particularly if you talk about big law, if you talk about consulting, investment banking, especially big tech too, anybody see the breaking news? Our very good friend Mark Zuckerberg at Meta he's saying, look, you guys got to be in the office at least 4 days a week, or essentially you got to hit the bricks. I mean, he didn't say it like that, obviously, but you know, that's my New Yorker spin on it. Crypto Meme says, I heard a talking head on Yahoo Finance say that hybrid work is here to stay. A hybrid form, yeah, maybe you come in 3 days a week, and then the other 2 days you could work from home. I think that makes sense. I could say from all my friends that work at big investment banks in the city, they're back 5 days a week, just from the people that I know. Because, you know, the message has been managing directors have to be back in the office 5 days a week. So if you think about having your managing director in the office 5 days a week, do you think the MD is just going to let their... really unlikely. I mean, if the MD is in the office, likely everybody's going to be in the office. Hey, Battery Grams, what's up? Good to see you. I know, Meg Low, I don't know, that's wild. Tiffany Page, the East Coast is synonymous with the rich architecture, born and raised. A unique opportunity to see the city. Love this channel. Thank you so much, Tiffany Page. Appreciate it. All right, one more shot of Billionaires Row, and then we're gonna head to Fifth Avenue. Hey, Krog Dog, what's up? Wow, Bree Graham says my office is moving to in-person 4 days a week. John says not a knock on in-person. I was a pilot for a long time, and it's totally different culture in person. Yeah, I think a lot of people make a lot of good points. My take has been this: if you are more senior in your career, then yeah, do the work from home stuff, right? But from my experience, I'm just thinking, you know, how my career has developed. If I wasn't in the office 5 days a week, sometimes 6 days a week, sometimes even 7 days a week, I would come to the office on Sundays, I would not have been half as successful as I was in my job. And maybe that's just because, you know, that's the way I learn. People are different learners, but I need to get around the top people in the office, right? That was always my strategy. I remember when I first got hired as an account executive, every Monday, our manager, right, your director, would email everybody a list of the top producers, right? And there was a list of 100 sales reps from all up and down the East Coast. And 2 of the top reps just happened to work in my office. So I'm like, I'm gonna do whatever I can possible to get around these 2 people, to try to add value to them, try to help them, so I could work deals with them. And that was a very, very good strategy. Because chances are the people that are not producing and are not performing, those are gonna be the people that are always negative, right? I think we all know these people in the office, right? We don't have to name drop. But you ever see the person in the office who's always miserable, always negative, always talking bad about the company? They're probably not producing good results for the company, right? They're probably not selling anything. They're probably, you know, on their way out. They're probably on PIP. But the top performers, they are always on it. They work a systematic process. They're successful. They're optimists. And if you're very young in your career, if you're in your 20s, you got to get around those people. And if everybody's just working remotely, there's going to be no opportunity, or I would say a very small opportunity for young people to get around the winners, right? To get around the people who are top producers. It's hard to do that over Zoom. So I don't know, if you're a young kid, young guy or girl who's just starting out their career, I would be in the office every day. That's what I would say. This is actually the Trump Tower now. We're standing outside of the brand new Tiffany building. They just remodeled this whole building.
Good night, good night.
Hey, Hawaii, this is Tom. I've worked in the office 5 to 7 days a week most of my life. I earned working remotely and I love it. 15 years on the job this past May. Wow, awesome. Love that. 15-year anniversary. That's awesome. Congratulations on your success. Yeah, I mean, I think it's a good plan, right? I mean, if you've been doing it for 15 years, you've earned that right to sort of have more flexibility. Yeah, MBA lives is like being around negative people. It's like pulling teeth. It really is. SM says I don't miss team dinners. All right, we are outside of the Trump Tower. So at the Trump Tower, on the bottom floor, obviously the lobby, you have your retail space. This Gucci store has been here since I was a kid, pretty much. In the middle, so the middle section of the building is actually office space. There's an international business center here. And then the top portion of the building are condominiums, like luxury condos, which are really, really nice places too. Hey, Andy's here. What's up, Andy? Good to see you. We'll cross while we have the light. Looks like the Empire State Building is purple tonight. Now, I think this building, I'm trying to think. This building with all the stained glass here, I could have sworn this was some very luxurious like hair salon place. I think it was called Frederick Fekkai. Is anybody familiar with that? I think I've been in here a couple times. But the place is totally vacant, which is wild. Now, I want you to notice Fifth Avenue. The city has really zoned this to keep its integrity for retail shopping, right? So you see a lot of, I would say, luxurious places. Like you have the Dolce & Gabbana right here. You have the Gucci store. You have the flagship Apple store. Harry Winston. You have Prada. But more and more on Fifth Avenue, places have been closing down and moving out. I think the highest retail vacancy is actually in Midtown Manhattan. But the lowest retail vacancy is actually in Soho, which is kind of, I guess, not strange. Soho is a very, very fashionable neighborhood. But it's interesting to look at a lot of the retail vacancy rates in the city. Hey, Wrong Verg says my department's productivity has almost doubled since we all started working from home. We are working more hours since we don't have to commute. That's a very good point. I remember when the pandemic just started. I sort of caught myself doing the same thing. And I didn't really like it after a while because I would wake up, You would get on your team morning meeting. And like you said, there's no commute, there's no going out to lunch, so there's no break. It's literally like you're working all the time. So I found myself eating breakfast, lunch, and dinner at my desk and replying to emails at like 9, 10 o'clock at night. That's a good point. And I hated that, honestly, at least for me. Because at least in my office, the way it used to work is my manager would always check out of the office at 5 o'clock, 5:30. And everybody else, all the other sales reps, we would usually stay to like 6 o'clock, sometimes 7:30 if we were working on big deals. But that's sort of when the emails died down, right? Because if your boss, who's sort of leading all these deals, who's doing all the checks and balances on all these decks you're building, if he's driving or taking the train for 2 hours, that sort of puts an end to all the emails. But if he's not doing that and he's just at his desk eating dinner, well, the emails continue to fly until the wee hours of the morning. At least that's what it was for me. This is 575 Park Avenue. This is actually one of the main offices of Douglas Elliman. Right here next to 432 Park Avenue. FredEx has had we walked the High Line recently. We've done it once, 2 weeks ago, but only for like 30 minutes because they kicked us out. Place was closing down. Yeah, JM says we all still had to work during the pandemic, but we had... copy that, okay. Sparks Carnival says Warren Buffett is buying Japanese stocks. Yeah, Sparks Carnival, I'm not sure if you're on Twitter. 2 weeks ago I posted, I said this is the most bullish chart that nobody is talking about. And the Japanese stock market is approaching its all-time record high that it set in 1989. Japanese stocks could be on its way for a real rocket ride, my friends. Hey, Chris Tompkins says, I don't think return to the office is really about productivity. Companies know they will lose too much value on real estate if it's not utilized. That's a very phenomenal point, Chris, and thank you for your donation, by the way, too. Chris makes a good point. Now, has anybody noticed something over the past, I would say, 3 to 4 earnings cycles from companies like Meta, Google, or Alphabet, right, Amazon? They've all shed tons and tons of square footage in terms of office space. They're either trying to break out of their leases, or they've said to investors that once our lease is up, we're not going to renew it. Yeah, I mean, I think that's just another issue we're going to come up upon in commercial real estate. Now, another big scare factor is that a lot of the debt on these buildings is going to need to be refinanced over the next 18 months. So, to Chris's point, if vacancy rates are skyrocketing in office buildings, right? Well, that means your income, right, operating income is going down because nobody's paying their rent. You don't have any tenants. All while these, I should say, the debt is going to need to be refinanced. Now, why is that a huge issue? Well, think about what we talked about at the very beginning of this live stream. We actually just heard from the Fed chair, Jerome Powell, today, as he was testifying before Congress. He said specifically, you know, all of the Fed presidents, we all agree unanimously that we need at least one more rate hike, right? So if all of this debt is going to need to be refinanced in the next 18 months, well, interest rates are not at 0 anymore. They're going to be at 5.5%. So you're going to have the cost of servicing this debt explode just when everybody needs to refinance the debt. And oh, guess what? Vacancy rates are through the roof. That's another good point. Very, very good point. Okay, this is the lobby of 432 Park Avenue. Hey, JM, thank you so much. But if you guys have been enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We are back in New York now, so we should be back on our regular streaming schedule. We start these live streams at 8:30 p.m. Eastern. So if you like what you see, feel free to subscribe. Also, you can connect with us in the links in the description. You could sign up for our newsletter, connect with us on Twitter. We talk a lot there during the day. But speaking of Class A office space, this is probably one of the, I would say, the most prime office buildings in the city right now. It's 425 Park Avenue. Look at this thing. Ken Griffin's actually in here, Citadel. Hey, speaking of Jerome Powell, we have him in the chat. Mr. Fed Chair, thank you for joining us tonight. This is Tom. What's your opinion on Jerome Powell stating that the Federal Reserve identifies stablecoins as a form of money? Identifies stablecoins as a form of money. Well, I guess technically, any type of cryptocurrency is a form of payment, I guess, right? But maybe you're referring to the CBDCs, the central bank digital currencies. I don't know. It's of my opinion, and we've gone over this multiple times, but it's of my opinion that we already have a digital currency, and it's called the US dollar. The vast majority of the transactions of the US dollar are done digitally, right? Money is just numbers in a database. That's literally all it is now. There's not enough physical dollar bills and physical coins to cover all of the circulating supply of money, right? So if I wanted to go to Chase Manhattan Bank and pull out $1 million, they're going to be like, we don't have $1 million. We have to order the money from you. Or order the money for you, right? They literally have to order it. So I think we live in a digital world. So I think people are just opposed to this idea of digital currency because they think that if we have a digital currency, well, the government could shut me off and, monitor what I spend my money on. To which I would say they could already do that now. I mean, they already have the capability to do that now. They could they could literally debank you overnight. So I don't know. I think digital currencies are a good thing. That's what I'd say. I'd say digital currencies are a good thing, and pretty much all of my transactions are digital. Right? When was the last time anybody here paid for something with physical currency? Yeah, Carlos says 90% of transactions are already digital. It's a good point. Is it 90%? I don't know the exact percentage, but it is a lot. I would say it's the majority, right? Especially for the younger millennials or the Generation Z crowd. They just use Zelle, they just use Venmo, right? Very, very seldom do they pull out physical currency out of the ATM. Look at this. So this is the Ferrari dealer. I should say showroom. Hey, Steve CR is here. What's up, Steve? Welcome back to New York. We're happy to have you here. Yeah, hang with Mark Moms is all mine are digital. I seldom have cash in my possession. Chinook wins as I get cash tips at work. That's good. Tux Brown, what's up? That's a funny comment. Maybe. You know, and I think over the long term, especially... Oh! You all right? You okay? Do you need us to call a cab? You need a taxi? Yeah, we'll call you a cab. You want to get a taxi? I mean, let us know. We'll call you an Uber or something. Where do you gotta go? Do you know where you gotta go? Hey, welcome to New York. Happy to have you. What part? Nope. Ah, part. Nice. Very cool. Thank you. Yeah, no problem. Good job. Hey, thanks, guys, and welcome to New York. Thanks for coming. Appreciate it.
You're so nice. Thank you. I'm good.
You good?
Yeah.
All right. If you need anything, just let someone know. All right. Sorry about that. Hey, Brad's Brain. What's up, man? Hopefully your move to Texas is going well. All right. Let me catch up on the chats. Yeah, SM, I think she just fell. I think she may have just had too many drinks or something like that, but yeah, she fell bad, like face planted, face first. Hey, Michael Joseph, good to see you. I got your email. That I will tell you this, that is going to be one of my main goals for this year. I should say the second half of 2023. I want to be able to master Python so I could do some interesting things, particularly trading algorithms, back testing, things like that. So I appreciate all the resources you've been sending me about that. We'll have to connect offline about that. But I did get your emails. I did get your email. Hey, Techno Pink, what's up? All right, let's go to the Seagram building. Techno Pink is joining us from the Dominican Republic. How is everything in the consulting world? Our fellow EY consultant is in the house. Yeah, Dan Zanks says, be careful driving in New York. Oh, Dan, you're a Queens guy. Did you see, somebody said, it was one of you guys, sent me that story about the skateboarder who got shot the other night. I think there was some sort of road rage incident in Sunnyside, Queens. I think the kid was skateboarding and he accidentally fell into a BMW. And the BMW guy, instead of helping him out and saying, hey, you all right? He shot the skateboarder. So hopefully he's making a full recovery. All right, this is by far my favorite office building in Manhattan. Okay, and if you want to come see it yourself, this is on the corner of East 53rd Street and Park Avenue. This is the Seagram building. It is a beautiful, beautiful building. I think Centerbridge Partners is in here. There was also one point, I should say pre-pandemic, there was a competitor of WeWork, which is called Serve Corp. They were actually in this building, I think on the 17th floor, but they went out of business, I think. I think there's only one functioning Serve Corp location now in the city, and I think it's in One World Trade Center. And I was so bummed about it because I was actually gonna rent a little office space right here from Serve Corp in the Seagram building, but unfortunately then we got the coronavirus, and that put a little bit of a wrench in those plans. But I think this particular building is also, the majority of it is vacant. And the owner, as we were talking about refinancing, I think he's gonna be in a big, well, I won't say that. I'll just say they're going to need to refinance the debt. And there may be some problems there. Techno Pinks is lots of immigration traffic at EY. Nice. NBA Live says, Tom, did you hear about EV scooter shop fire in Chinatown? No, I didn't. Holy crap. I've been sort of out of the New York loop. I've been in Miami for 2 weeks. Damn. You know, those electric scooters have been an issue. They have actually been the cause of a lot of apartment fires here in New York, particularly in the outer boroughs. I think it's those lithium-ion batteries, when they get wet or compromised with water, they could catch fire. So the FDNY has actually been putting out notices to say, do not keep these electric scooters in your apartments. Keep them outside, because they've been responsible for many, many fires. Yeah, Steve CR says lithium-ion batteries are impossible to put out. You know, this was a problem with Tesla when we had that big hurricane on the west coast of Florida. Does anybody remember that? Not Tampa. I'm blanking on the name. Fort Myers. Fort Myers got hit bad by that hurricane, and a lot of the Teslas were submerged all the way with salt water. And salt water and those EV batteries do not mix. So the fire department down there were actually telling people to pull their Teslas out of the garage because they were catching fire and burning people's houses down. It's a big problem. Hey, Brick Stonewall's here. Good to see you. Speaking of KPMG, here's KPMG, but their major, I would say main headquarters is now in the Hudson Yards, which we may be able to go to tomorrow. Now, this is Blackstone. As you think about Blackstone, you think about real estate, right? Private equity. I'm reading a really good book. I'm not sure if you guys saw this. There was an amazing book that just came out by I would say a very well-renowned Wall Street Journal real estate reporter. And the book is called Billionaires Row. And it is not only a story about how Billionaires Row came about, but it also gives you a really nice history lesson on the big players of real estate in New York City. So if you guys are looking to learn more about real estate in New York, particularly these big developments like this one right here, 432 Park Avenue, pick up the book. It's a great book. When I finish reading it, we'll do an entire review on it. But this company right here, Stephen Schwartzman's Blackstone, comes up quite often in the book. I know John Abraham says, Tom, the sub with the Titanic. I can't even believe that, man. You know, I was looking into it today. I was taking the train on the Long Island Railroad coming into the city today, and I was watching this video. Oh, I'm just waiting for the light. Of the Coast Guard. And the Coast Guard, I mean, I don't know. I really, really hope they find that sub. I couldn't even imagine how, I don't know. I'm just extremely claustrophobic. I don't know how 5 people could even fit in that little thing. And the Coast Guard guy was detailing the sort of the search area that they're searching in. And that's like finding a needle in a haystack, guys. But I mean, I really hope they find them. Oh, man, it's just crazy to even think about. Like, I don't know. I can't think about it. Yeah, MBA Elias says, Tom, were you able to find out some more information on the Aston Martin building when you were in Miami? Yes, and it's looking good. I may be able to get you guys in there. So stay tuned. In maybe about a month, we'll be doing a live guided tour of the Aston Martin building in Miami. It's looking good. So I think that'll be fun. I think that'll be fun to do. Now it's almost finished. If you saw some of the streams we did down there, as you're coming over the bridge from Brickell to downtown Miami, almost all of the lights are actually on. Finally at the Aston Martin building. And the Riverwalk is almost complete. It's looking really good down there. Hey, Isaac C, what's up? Good to see you. Hey, Carol H says, hey, Tom and friends, have fun in New York City. I saw your videos around downtown Miami where I stayed at. Carol, I think you stayed at the, where was that? The Elser, right? How was that hotel? You know, that's such a unique building because it's overlooking Bayfront Park, right? And it's a hotel and residences. I think there's units for sale from studios to 3 bedrooms, and they're fully furnished units, by the way. So if you purchase one, they're all furnished, all of them. And it's easy to do like short-term rentals. It's a very unique building, beautiful building. Hopefully your stay was awesome. You said you loved it. You said, I love the stay. Yeah, I mean, the amenities in that place, it's just insane. It's an awesome building. I have a really good friend who is looking at purchasing a unit there. Yeah, SM says, I don't like the idea of renting out my spot. It's not for everybody, right? Some people are very private. But some people like it. I like it. I don't mind. I think the younger generation, the younger crowd, doesn't really mind what I like to call the sharing economy. Now, this is Mr. Diamond's brand new office tower here. 270 Park Avenue. Carol H says the amenities were awesome. It's a fantastic building. Hey, Vinny Castellanos here from Staten Island. Good to see you, Vinny. Yeah, we're just checking out Jamie Diamond's new spot here. It's looking good. They're actually putting the glass on it too. This is another example of prime Class A office space. It's going to be coming on the market in New York. Prime location. There's going to be a lot of consolidation. I think JP Morgan Chase is going to consolidate the majority of their space right here. So I believe they're going to close down one of their main offices in Queens. I'll try to get you guys up on the stairs so you have a little bit better view. But it's coming along great. I think it looks really good. Hey Pedro Luis, what's up? Says, hey Tom from Brazil. Looking to spend 30 days. What is the best borough? If you're gonna stay in an Airbnb, I would stay on the Upper West Side of Manhattan. If it's gonna be 30 days, look between, I'll say this, Upper West Side of Manhattan below 86th Street. 86th Street and below, you're gonna probably find a really nice brownstone. It's gonna be very private, very quiet. That is where you wanna be. That is where you need to be if you're gonna stay here for 30 days. I wouldn't advise Midtown. I think you're gonna be here long enough to where during the day you could explore Midtown and all it has to offer. But you want somewhere quiet and nice to go to sleep, right? And I think the Upper West Side will afford you that opportunity, sir. So check it out, Upper West Side of Manhattan. You have the best of both worlds between Central Park and Riverside. Beautiful tree-lined blocks. You could wake up, take a nice walk in Central Park, and you jump on the one train, you're in Midtown Manhattan in a second. So you get the best of both worlds. You could experience Midtown Manhattan, the hustle and bustle of the city, but at night, you can go to sleep in a very, very quiet, family-friendly neighborhood. So here's JP Morgan Chase. This is 277 Park. We'll be able to have a little bit of a bird's eye view of the construction site. But Pedro Luis, if you need more specifics, just shoot me an email and I'll tell you some locations. Yeah, Blues Writers, JP Morgan still selling 5.5% one-year CDs. Yeah, rates are going up and savers are finally being rewarded. So Blues Writer, we were just talking about that. It's a good point. A lot of people think that interest rates being higher is a negative for the vast majority of people. I actually see it in a different light. Savers are finally being rewarded once again in the United States, right, for doing the right thing. That's how economies are built sustainably, is through savings and investment. And I mean, if you think about, just think about the duration of an American, right, an American citizen. Usually, people are graduating college, they get a job, and then they start to acquire assets, whether that would be you're investing in stocks or you're purchasing homes. And in order to do those things, you need savings. But over the last 14 years, you were in the negative, right? Your real rate of return on a savings account was hugely in the red. Now, some CDs, like Blues Writer said, is 5.5%. Some money markets, you go to Interactive Brokers, Charles Schwab, Fido, whatever your brokerage account is, you could find money market accounts yielding 5%. And if you go to Treasury Direct, which is essentially the US Treasury's website, you can buy a one-year US Treasury risk-free rate of return for 5.25%, right? So I think over the long term, that is good for US consumers, because as they're saving money, they're actually making a decent yield on that money. Just compound out. A little bit of road rage. Just compound out 5% over, 4 or 5 years. If you're diligently saving, you got a nice chunk of change, either to make big bets in the market or to buy a piece of investment property. Arsenal fans says, hey Tom, do you think the Miami rail extension they had planned out to North Miami and South Beach? Oh, what do you think of it? I think it's great. Do Do I think it'll happen, and how soon do I think it'll happen? I don't know. That I don't know. I will say this, because I saw your email, and I appreciate you sending me that. I really do. If Miami ever extends the Metro Mover, the Metro Rail, whatever, and has sort of like a Long Island Railroad system, right? So think about the Long Island Railroad that takes you from Nassau, Suffolk County into Manhattan. And now, funny enough, since we're outside of Grand Central Station, the East Side Access Project is actually complete. So you could take the LIRR right here at Grand Central. If you're able to go from Sunny Isles Beach, North Miami Beach, Wynwood, to downtown Miami and Brickell on a train, whew, lights out. I mean, that is lights out. I think the only factor, the one thing that's stopping Miami from reaching its true potential is the lack thereof of public transportation. If you know anybody who lives or works in Miami, chances are they have a car, right? It's not like New York where you don't need a car, or you're kind of crazy if you have a car here. So if they extend the trains all the way up to North Miami Beach, Hollywood, Florida, even all the way up to Fort Lauderdale, which I think the Bright Line goes there now, that's going to be a game changer. Sparks Carnival says Lemonade insurance is up 45% year to date and down 5% today. So Lemonade, ticker symbol L, I think it's LMND, right? I used to use them for my renter's insurance because the building that I was in required renter's insurance, but I think that company's a little bit iffy. There's some fishy things on their balance sheet, to say that. There's Tom, 3 big tropical depressions. I saw that. It's called Tropical Storm Brett, is that correct? I think it's off the coast of Cuba, or I think Tropical Storm Brett may go just directly under Cuba. So hopefully it doesn't make landfall in Miami. Hopefully not. Hey, Mr. John Lee is here. He says, hey Tom, what do you think about the indices pulling back, possibly a big buying opportunity? John Lee, if you're not on Twitter, you got to get on Twitter and check out a lot of the stuff I posted there today. I posted a lot of charts and stuff. Yeah, it is of my thought process, and then I got to cut you guys loose because I got to wake up ridiculously early tomorrow. I think we're going to go through this summer, and I think all the major indices are going to pull back, but I think that's bullish. I think it will be bullish. It's all about how this correction digests. If it's on very disturbing high volume and it's crashing through the 50-day, then that's not good. But what we usually see during the summer is a huge volume taper. So in the summer, usually speaking, all the big managers are out in the Hamptons, Connecticut, on vacation. So you see a lot of volume on the exchanges decline, right? Some of the lowest volume months are during the summer. So if we see a lot of these mega cap tech finally pull back, I think that is bullish, and potentially we could even see a rotation into some of the smaller caps, right? So look at IWM, like the Russell 2000. I think that's going to be a big tell, because if we do have a rotation into smaller caps, that would signal that breadth is improving, right? So the overall breadth of the market, the vast majority of this rally in the major indices like the S&P was really powered by a handful of stocks. But, and again, I post a lot of this data on my Twitter, so if you guys want to look at that, the percentage of stocks trading now back above the 200-day has actually materially improved a lot. So I think that's what we need to watch for. All right, but guys, we are now at the train. We are headed towards Grand Central Station. And I will see you all tomorrow night, Thursday night. So if you enjoyed the live stream, feel free to leave a like on the video, subscribe to the channel if you are new. You could click the links in the description to connect with us off YouTube. And I wish you guys a phenomenal second half of the week. So Mike Skate TV, appreciate it. Dusty Cole, Mike C, always a pleasure seeing you. Steph UH, always a pleasure. Jonathan Earl, Richard Vogel, Susanna Q4, Western Mass Dave, wishing you the best. Melissa 2087, Richard Vogel. Photos from around New York. Have a great rest of the week. TK Porsche, Abdullah, Mohammed, thank you so much. Meg Lowe, always appreciate you tuning in and joining. Joseph Hardaway, username, schmoozername. DM, thank you for being a great moderator. Natalie Hassan, appreciate you. Andy from South Korea, thank you for joining. Hang with Mark Mom. British Gray, Austin City Limits, Sabrina Fair. And there's always a bull market somewhere. You just need to know where to look. Hopefully I'll see you guys live from Manhattan. Maybe we'll take a little bit of a walk around Soho. All right, NBA Elias, appreciate it. Be well, everybody. See you tomorrow.